Hey, what's up, everybody? Froggy Stonks here. Nothing I say is financial advice, entertainment purposes only. Market meltdown or boom boom part 2, whatever the title says. I just wanted to talk to you guys real quick about what happened this weekend. I was saying this Sunday and this Saturday that there were a lot of multimillionaire and billionaires out there absolutely harassing retail. It's just crazy. Why are these multimillionaires and billionaires out on social media, CEOs out on social media, going after retail? Like, what is even the point in that, other than they're just incriminating themselves with every word they say? It's absolutely crazy. Even the MSM was out hardcore this weekend, pushed in doom and gloom news articles, which I got one pulled up right here. It's from Fox Business, of course. And by the way, I believe the only credibility at Fox Business is Charles Payne, and I stick by that. Everybody else is just part of the system. I think Payne is the only reason Fox Business has any traffic from retail anymore, or from us anyways. But anyways, you have this. It's a story in 2 parts at Fox Business. Bank of America spreading fear on Sunday night to report their losses Monday morning. The only person at Fox with credibility is CV Payne. Here it is. This is what I mean. At Fox Business, this is Sunday night. Creating clickbait market crash FUD while citing Bank of America. They were citing Bank of America. Look at this. It's a guy looking at a screen. Oh my God. Oh, market crash. Oh no. Like all the YouTubers, man. It's these thumbnail clickbaits that get everybody. Bank of America strategist warns the U.S. stock market is likely to see further losses as the Federal Reserves continue to fight inflation. Right? Boom. Sunday night fear. Everybody, Monday morning, let's buy puts. Guess what happened Monday morning? Boom, boom. The SPY almost ran 3%. It's cooling off. It's coming back up for another run. APE up 11%. AMC up 6%. BBIG up 2%. GME up 6%. Everything green, except for Rumble, which Rumble runs when the market's down. I don't even know why. But you see what I'm saying? It's just clickbait garbage. And then Unusual Whales comes out, and I just retweeted them. I tried to find it on their page. I like credit where credit's due. But Unusual Whales just tweeted that Gold Telegraph, China has unexpectedly delayed the release of GDP data. This is the world's 2nd largest economy. They've delayed the release of the GDP data because the CCP has crashed China's economy. Global economies are absolutely struggling right now, and their currencies have hit all-time lows. They have the unfortunate issue with the Russian aggression against Ukraine, whatever's going on over there. But here's the problem. The U.S. markets, the big money is playing them like '08. They wanted a big market crash. The problem with that, when you look at the differences between '08 and today, is that there are trillions of retail dollars in the U.S. stock market, right? This is a big deal. It's hard for you to crash the market below pre-pandemic highs when everything past the pandemic, which is here. Oh, come on. Stop it. Which is here, which was 324.59, 325 was the pre-pandemic high. The pandemic hit, we dropped down to 210, and then we got a lot of government money for just coming out of the gates. A lot of retail investors got a ton of cash. New brokerage apps were really taking over. Crypto was booming. We inflated the market from here all the way up to $474.49. Now, the problem with that was meme stocks this entire time. Institutions across the board were doubling and tripling down on their bad short positions in meme stocks, and it's not what you think. It's not what you think. Market makers are selling securities they don't own. Securities sold, not yet purchased. Citadel's on the books for $65 billion as of the last annual, right? So how many other market makers are holding securities sold, not yet owned? That is a big problem because they are selling securities to brokerages like Robinhood, which is an absolute dumpster fire. Robinhood brokers your sale or your buy. So they send it to the market makers through PFOF. They say, yeah, we don't have it, but we'll give you this IOU and we'll hold the cash in the dark pool. Robinhood goes, yeah, okay, cool. IOU, here you go, retail investor. Here's your real share of AMC when it's not real, it's fake. So what happens is Robinhood then loans your share out to make up money on it. They're making PFOF money and lending money on your share and then saying, well, if you do our lending program, we'll give you a little bit of money. You get a fraction of what they're making. The problem is they're lending out an IOU, a phantom share, to a short. Now, the hedge fund that's shorting that probably doesn't know that that's a phantom share. They are now naked short. Now you have over-leveraged market makers, you have hedge funds that are naked short, and you have brokers that are already insolvent because they actually don't own anything. This is why I like DRS, direct registration. Now don't fret, the share you bought, you will have to be compensated for, but keep in mind, Robinhood could just liquidate you at any time they wanted to. They can do that anytime they want. They can say, we messed up. This is a problem. We're liquidating everybody's positions, or going to close only, or taking away the buy button. Now, why this is effective for the overall market, why this is affecting what everybody's screaming is going to be a massive market crash that I don't personally think is necessarily going to happen unless we have a really bad event like aggression in Russia, a nuclear bomb, a big natural disaster, or something, aliens, whatever. The trillions of dollars in the retail market, trillions and trillions, is unlevered. 100% cash, unlevered positions. That's one whole US dollar versus one US dollar that's been split 5 or 6 times, held by the hedge funds and the banks. So the banks and the hedge funds are underwater. They're over leveraged. We're not. So what happens when all these funds and all these market makers become too over leveraged? Margin calls, right? Margin calls will hit when banks and hedge funds and big institutions become so over levered that they can't meet their margin and collateral requirements. They will have to be margin called. And now with the new pressure from the SEC going after Robinhood, Citadel, JP Morgan, Charles Schwab, there's more pressure on them to clean up their positions. Phase 6 is a big part of this, so credit to Bigums for that. The margin requirements have increased, they're stricter, and it reduces the ability for market makers to sell phantom shares into the open market. So now, yesterday, I made a video, titled this Part 1, and everybody was like, you don't have experience, I've been in here for 40 years. I've seen people in my comment section that I've never seen before. They're like boomer suit guys from Wall Street. I know my videos are now being suppressed. I can see it. We usually have about 140 to 150 people here on the chat at this time in the morning on a Monday. No problem. Please like, sub, share the video out. We're still getting our traffic later on, but my alerts are not going out to people on Twitter and YouTube. It's ridiculous. So if it's doom and gloom, market crash, Bank of America, who we know is over leveraged and they're an absolute dumpster fire, oh, everything's going to crash, you're all going to lose your money. That's what they want you to think. They want you to sell your securities, your stocks. They want you to sell so that they can take your shares off the market and delever. The biggest part of this is, too, there was reports that retail had put over $19 billion into puts in the market, betting for the market crash to the downside. Historically has never happened. Why is that a big deal? Because when the big money banks and institutions and market makers saw people putting billions into puts against the market, guess what they decided to do? Flip long. That's what they do to meme stocks every week when you guys go out and buy calls. We're going to buy calls for Friday. Guess what? They price fix. They drag the stock price below the high open interest on that stock, and they rip your premium in their puts print. But now that retail has flipped to the put side on the overall market, they're going to let it run, and they're going to rob your premium. They're going to let these stocks run. Their calls will go in the money, so they're hedged properly, but they're going to take your premiums, and they're going to start to delever. If in that case, what is coming, if China's economy is about to collapse, the UK is in deep trouble, Credit Suisse is selling off assets, big problems are coming. I agree. There's big overall market maker problems, big bank problems, big economic problems, but it is only big money. Retail has a consistent flow of money from our everyday jobs that we're putting into the market. And now we know we're so close to the bottom, people are buying like crazy. So they have to try to flip and go net neutral on these positions, and there will be some institutions that do it and do it correctly. Other institutions will fail, but the gloom and doom massive market crash, I do not believe is coming anytime soon. I believe the SPY is on a very predictable pattern. You have one large pump, one little pump, large pump, little pump, large pump, little pump, but this time We bounced an old resistance and an old support line very hard right here, which was around, what is that, 354? I was hoping the SPY was going to come back down to 330. It still may have the potential to do so, but I think we're getting ready to go on another big run back up to this trend line, which is going to put us around 390 or 400. If we don't, I'm wrong, and it doesn't matter. We are where we are, and I still hold my stock. If I'm right, though, I'm preventing myself from falling for the MSM FUD that's getting me to try to sell out of my position at the market bottom. So what's more valuable? Risking another 20% downside for the big pivot and a big bounce and buying the dip, or panicking and selling all my shit right now and getting out because Fox Business told me the market's going to go down and missing one of the biggest runs we've had in months. I think we're getting ready to go for a big run. APE is up 10%, AMC up 6%. We're green across the board. We usually have a good Tuesday with these two. We know we're over levered on the market maker side, and we know Adam Aaron has the ability to raise billions at the drop of a hat with APE. If he's even sold any yet, nobody can confirm if he's sold or not. We don't have any filings. I am waiting. I think Adam Aaron is going to do a good job. I wish he was more vocal. I do believe in speaking up and asking questions. I think that's a good thing to do for an investor, but I think he's on the right track. I think the contract with Citi Global is very well worded in the prospectus. It's not strictly at the market. They can do negotiated prices, bona fide offers, and in that, they also have the right to completely cancel the APE share offering at any time. So if the market makers don't play ball with Adam Aaron and give him a fair price for those APE shares, which would make us run and raise billions of cash, he can cancel it. And I would suggest to him to go back, use his authority to dilute 20% of AMC in a share offering as a surprise, because what will happen is we'll have another June event. He'll raise money with AMC, dilute 20%. People will have to cover because he's creating those resurrection shares out into the market. AMC will run. It'll devalue the bonds. The bondholders are short the stock. They will be worried about the bonds devaluing, and they will want to cover their shorts on AMC to remove the hedge and get out. That'll allow Adam Aaron to pay off some debt, and it'll allow him to protect APE and save it to raise billions upon billions later on if he hasn't already. Anyways, guys, that's my video. I really like where we're at today. I called it yesterday. I said, I don't think the gloom and doom market crash is coming. You know, who can predict these things? Everybody in hindsight's always correct. But I'm telling you, I think we're getting ready to see our gains back on APE, which I'm happy because I did buy the dip. I do believe buying more APE is causing dilution of the price because they're selling us phantom shares. And I really hope, and my theory is, my tinfoil hat theory is, Adam Aaron is being more silent because they have filed a challenge to the NYSE about APE on August 22nd through the 24th because of the 43 million FTDs that were intentional, which is a violation of Reg Show 204, 10B21, 203B5, whatever, 1934 security, all of it. So I believe there is some litigation ongoing. Let me hit these comments real quick. Josh Ham, good morning, buddy. DD214 Army, veteran. Morning, everyone. Josh Ham, bro, they going to say we ate go IBG to war? I really do think when this loose, they are going to use the excuse. I don't know, maybe, man. They could. I don't disagree with you on that. Like and shared. Thank you, Samuel. Appreciate that. Veloton, facts. But Donkey Kong, they probably letting us run this week, so knuckleheads jump into calls. That's what I'm saying. Everybody jumped into puts to hedge against the market, but now there's so many people that did it because retail is like, literally, there's really good retail investors that are out front that do things first, and then there's the flock of sheep that follow them because of the discords, you know, the super chats, all that stuff. You know, let's do puts, and everybody in the Discord does puts. So there's too much money in puts, so they're flipping long, and now everybody's going to try to jump into calls, and then they're going to say, whoa, retail's getting too high in the calls. Just buy the damn stock and hold it, man. The calls and puts, they're playing you every time. Calls and puts constitute 80% of the money that is engaging in payment for order flow. And that's a fact. Don't forget Biden has the PPT. Oh, that's true. We got jobs. I'm going to drive Uber 12 hours a day, 7 days a week till it's blow. Exactly. We've got more money, almost an endless stream of money to put into this market. So they can't ever beat us. We're just getting stronger and stronger. About 100 APE today. Congratulations. Josh, you're on point, bro. Thank you for coming in the chat. Again, please like and sub. Share this out. We're getting closer to the end of the month. So far, I've got about $600 I'm going to give out back to the community in gift cards from the ad revenue data from YouTube. I don't take a single dime from it. I don't believe in that. I don't believe in super chats. I appreciate you guys. Please share this out. Tweet it, Facebook it, Instagram, whatever you guys do. I don't know how all that works, but I'm going to go enjoy my coffee and enjoy this nice little run we're getting today. And I'm hoping for another pop tomorrow because we usually have a turnaround Tuesday, but I think it's going to be a continuation Tuesday. You guys have a great day. Froggy Stonks out.